and incidentally, the lowest income.
You might be noticing the first signs of inflation picking up. What we're seeing is significant inflation, and it's getting attention. Prices are going up, people are adjusting, and it's being accepted. It's not just the construction industry, it's happening across sectors. We have 9 home builders plus our manufactured housing operation, which is among the largest in the country. So we build a lot of homes and costs keep rising. Steel prices are climbing every day with no signs of stopping, and wages are following suit. If a 3-year contract is signed today, buyers like General Motors are still paying more daily. The economy is heating up, something we didn't fully anticipate. When our businesses returned to work, they faced challenges. We closed furniture stores for weeks, not knowing what would happen. Upon reopening, demand was so high that we couldn't deliver orders on time. Customers accepted the delays because everyone faced the same issue, willing to wait months. Even when we thought demand would drop, it kept growing. I check the numbers every week, and we continue to monitor the situation closely day by day. Something remarkable happened in 3 stores across Chicago, Kansas City, and Dallas. Sales haven't stopped growing. People have money in their pockets and are paying higher prices. When carpet prices rise in a month or 2, you can bet another price hike will be announced because our costs are going up too. Supply chains are chaotic for everyone, but there's this shopping frenzy happening, except in certain areas like international flights, which are still hard to get. Money is being redirected from some parts of the economy to others, and now a lot of people have more disposable income than before. However, it's still a tough situation for some. I haven't worn a suit in almost a year, and that's led to dry cleaners going out of business since no one is bringing suits or dress shirts to be cleaned. The small shop my wife used to visit is struggling. If your business didn't offer pickup or delivery, you took a hit. But if you did, you managed to adapt. Sales in places like Dairy Queen have surged as they adjusted. The economy isn't as price sensitive now as it once was. I'm not sure how this will show up in different price indexes, but there's more inflation happening than most people expected. About 6 months ago, a very smart person mentioned that this is just the beginning, and inflation could become a real concern. It's almost certain that inflation will continue over time, especially with the current policies we're following in this country. These policies are meant to stimulate the economy, but they'll inevitably bring inflationary consequences. We're also borrowing a lot of money from other countries, and it wouldn't be surprising if, in the future, politicians decide to repay those debts with dollars that are worth much less than when they were borrowed. This is a common tactic to reduce the burden of external debt, and we're accumulating quite a bit of it now. It's interesting how politicians often talk about using taxpayer money for various programs, like the financial bailouts, but in reality, taxes haven't significantly increased. In fact, federal revenue is lower than it was a few years ago. The ones who will likely bear the real cost of the current policies are those investing in fixed dollar assets, particularly from the government, as they'll find that their purchasing power will be significantly reduced when they cash out their investments. So, you could say that AIG's bonuses are likely being paid in part by the Chinese, due to the loss of purchasing power they'll experience with their holdings in US government bonds years down the line. But it's easier to say taxpayers are paying than to claim the Chinese are. It's an interesting situation. I read comments every day about how taxpayers are footing the bill for this and that. But my taxes haven't gone up, and neither have yours. In fact, they're about to send me $250 soon. Taxpayers haven't paid anything so far. My guess is that the real cost of much of this will be felt through the devaluation of fixed dollar investments in the future. That will be the easiest solution, and the easiest thing to do is often what ends up happening. So, we're likely to see significant inflation. The best protection against inflation is your own earning power. If you're the best teacher, the best surgeon, the best lawyer, whatever field you're in, you'll claim your share of goods and services, no matter what the currency is, whether it's seashells, Deutsche Marks, or dollars. Your earning power is by far the best protection. If you're the best at what you do, Whether a journalist or anything else, you'll get your piece of the national economic pie, regardless of how the currency is measured against past standards. The second best protection against inflation is owning an exceptional business. If you own a brand like Coca-Cola, you'll continue to earn from people's labor 20, 50 years from now. It won't matter what happens to general price levels because people will always trade a few minutes of work for 12 ounces of a product they enjoy. These are the great assets. First, your own earning power, and second, the earnings of a strong business that doesn't require heavy capital investment. If it requires a lot of capital investment, inflation will hit you harder. So, the best thing to do is to invest in yourself. Yes, young people should become neurosurgeons and invest in solid businesses like Coca-Cola rather than government bonds. If you factor in current interest rates, stocks are very cheap right now. The question is, what will happen to interest rates over time? But we can make some predictions based on the yield curve extending up to 30 years. We're living in a fascinating time. We've never really seen this level of money being injected into the economy, both through fiscal stimulus and near zero interest rates in monetary policy. It's an interesting situation, but there's one rule in economics. You can never make a move without considering the consequences. The government is sending out huge amounts of money. The president mentioned on Wednesday that 85% of people will receive a $1,000 check. Just a few years ago, we were saying that 40% of people couldn't come up with $400 in cash for an emergency. So 85% of people are receiving these sums, and so far there haven't been any major negative consequences. People who receive the money feel better, and those lending the money may not feel as great, but it drives stock prices up, helps businesses thrive, and keeps the electorate happy. We'll see if it causes anything else. If not, you can expect this to continue on a large scale. But as with everything in economics, there are always consequences. This is why companies like Google and Apple are incredible in terms of the returns they generate on capital. We don't own Google or Microsoft, but they're companies that require little capital and produce a lot of cash. When you compare that with government bonds, we have $100 billion generating just $30 or $40 million a year, depending on short-term rates. This puts pressure on the system, which is exactly what monetary authorities want. They're doing it even more aggressively in Europe. With fiscal policy helping, people are feeling good. People have become numb to big numbers. Trillions don't mean much to anyone, but $1,000 means something. We'll see where all this leads. For Charlie and me, this is by far the most interesting economic scenario we've ever seen. Professional economists, however, were caught off guard by what happened. It reminds me of what Churchill said about Clement Attlee. He was a very modest man, and he had much to be modest about. That's what happened with the economists. They were so sure of everything, but it turns out the world is more complicated than they thought. Keynes said many years ago that inflation is an invisible tax that only 1 in a million people truly understands. It's a tax on those who put their faith in the currency issued by the government. The best protection and the best investment against inflation is improving your own earning power, your talents. Very few people fully maximize their talents, but if you invest in your skills, no one can take them away. Whether you're a lawyer or something else, that's the best protection against a currency that might quickly lose value. The best passive investment is owning a good business. If you have a stake in a solid company, it's likely to maintain its purchasing power no matter what happens to the currency. It's interesting that in the US, the value of the dollar has dropped by 94% since I was born, leaving it worth just 6 cents. Inflation is a cruel tax on those who believe in fixed dollars. But even in times of inflation, things can still work out. If someone had told me at birth that a $1 bill would be worth 6 cents today, I might have reconsidered entering this world. But things turned out fine, so I have no complaints. Investing in yourself is the best thing you can do. Anything that improves your talents is something no one can take from you. Governments can run huge deficits, and the dollar may lose value. But if you've maximized your skills, you have an incredible asset. That doesn't mean everyone has to go to college, but anything that enhances your communication skills is extremely important. I took the Dale Carnegie course, paid $100 for it, and it was worth more than a college degree. I always tell students, find a job you would do even if you didn't need one. Don't sleepwalk through life thinking everything will just work out. Don't fall into the mindset of, I'll do this and that, and one day when I'm older, I'll start living. You need to be doing something you truly love. You might not find it in your first job, but don't give up until you do. You're going to make mistakes in life. No doubt about that. Just try not to make them in the big decisions, like who you marry, for example. In business and investments, I'll make plenty of decisions, and some of them will be wrong. But I try to minimize them, and I don't dwell on the past. The biggest mistakes are the ones you don't see. Errors of omission rather than commission. We've never lost a huge amount of money on any investment, but we've missed out on potential profits, possibly in the billions, from things I knew I should have done but didn't. For instance, not buying Microsoft back in the day wasn't a missed opportunity because I didn't know enough to make that call. But there were other investments where I knew enough to act, and I didn't do anything or did too little. I was hesitating when I should have been writing checks, basically. And those mistakes, they don't show up clearly, but they still have a big impact. There's no place where missed opportunities are clearly visible, but I know I've let some big ones slip. Success in life is partly defined by the understanding that not everything will be a win. I never obsess over mistakes. I know people who do, and it's just not worth it. Tomorrow is a new day, and you move forward, focusing on the next thing. What I do requires thinking independently. If I just follow what everyone else is doing, I won't get exceptional results. So, I need an environment and mindset that allow me to think for myself. I have an incredible partner, Charlie Munger, one of the smartest and highest quality people you could meet. We think alike, so even though we don't talk often, we already know how the other thinks. He's taught me a lot. If I needed a group to make all my decisions, I probably shouldn't be running things. I don't mind having that responsibility. I've seen, especially in investing, that the larger the decision-making group, the more homogeneous the thinking becomes, and that's not how you get brilliant results. To me, IQ and talent are like the horsepower of an engine, but the real output depends on rationality. Many people have 400 horsepower engines but only get 100 out of it. It's much better to have a 200 horsepower engine and make full use of it. So why do smart people do things that hold them back? It comes down to habits, character, and temperament. The key is behaving rationally and not sabotaging yourself. Everyone here has the potential to achieve what I've done and even more, but some will and some won't. Those who don't, it won't be because the world stopped them. It will be because they stopped themselves. You want to surround yourself with the kind of people you aspire to be. You'll move in that direction. The most important person in this regard is your life partner, and I can't stress that enough. The friends you make will shape who you become as you go through life. Choose good friends, keep them, and make sure they're people you not only like, but also admire. I have a traditional belief that I should only invest in things I truly understand. And by understand, I don't just mean knowing what the product does. I mean understanding what the business's economics will look like in 10 or 20 years. Take Wrigley, the gum company, for example. The internet won't change how people chew gum or which gum they prefer. If you have a big chunk of the market with brands like Double Mint, Spearmint, and Juicy Fruit, those brands will still be around in 10 years. I can't predict the exact numbers, but I can make a pretty good guess about the future. This is what I call my circle of competence. I understand what they do, the economics behind it, and the competition. That's different from just assuming an industry will do well. When I look at internet or technology businesses, I see amazing opportunities. I love using my computer, ordering from Amazon, and enjoying all of that. However, I don't know who will come out on top, and unless I do, I'm not interested in investing. The most important aspect of investing is defining your circle of competence. It's not about how large that circle is, but about understanding where its boundaries lie. It's crucial to know what you understand and what you don't, and to stay within those areas. Tom Watson, the founder of IBM, once said in his book, "I'm not a genius, but I'm smart in certain areas, and I stick to those." That's the secret. If I understand certain things and focus on them, I will do well. But if I venture into something I don't understand simply because my neighbors are talking about it or because the stocks are rising, I will eventually get hurt, and I will deserve it. I once met Bob Woodward, who had just released All the President's Men and was becoming quite wealthy. We had breakfast at the Madison Hotel, and he asked me what he should do with that money. I told him that investing is about assigning yourself the right narrative. Imagine if Ben Bradley told you in the morning what the value of the Washington Post company is. What would you do? You would go out, interview TV brokers, journalists, and owners, trying to evaluate each asset. I told him that's what I do. I assign it to myself. The right story is everything. There are some stories I can't write. If you asked me to write about the value of a glamorous but unprofitable business, I wouldn't know how to do that. But if you asked me to tell the story of Potomac Electric Power, I could write that story. That's what I do every day. It has been my art for over 50 years. I can paint whatever I want. I don't have to follow what Wall Street tells me to do for the next quarter. I own the brush, the canvas, and the canvas is limitless. This is a great game, and I play it every day with people I like. I don't have to associate with anyone who makes me feel bad. I always say that if you reach 65 or 70 years old and the people you want to love you truly do love you, you are a success. I've never seen anyone at that age, even if they don't have much money, surrounded by love and feeling unhappy. I've seen many wealthy people over the years, some now 86, and I've never met anyone over 70 who felt good about their children and unhappy with their life. My experience has shown me that many people with a lot of money have failed at the most important task they had, raising their children and building personal relationships. Sometimes this happens for external reasons, but often it's a matter of choices. In fact, I have never met anyone, regardless of their economic circumstances, who felt that their life was a failure. I knew a very wealthy man who put a lot of money in his children's names, but didn't want them to have control over it. Once a year, he would have dinner with them and try to get them to sign their tax return blank. Imagine that. 4 children, and he didn't have enough confidence in them to let them manage the money. It was simply madness. During that dinner, he would manipulate them, and they knew exactly what was happening. He would, in a way, bribe them to sign the blank tax return so he could file it without them knowing what they had. I've seen this happen repeatedly. Many people who have succeeded in business do not feel good about their lives. Now, speaking of long-term capital management, I hope most of you are familiar with it. The story is truly fascinating. If you take people like John Meriwether, Eric Rosenfeld, Larry Hillenbrand, Greg Hawkins, Victor Hagen, and the 2 Nobel Prize winners, Merton and Scholes, you will see that these 16 probably have an average IQ as high as any 16 people working together in a business in the country, including Microsoft or anywhere else you might name. There is an incredible amount of intellect in that room. And on top of that, these 16 had extensive experience in the field they were operating in. They weren't just a group of guys who made money selling men's clothing and suddenly decided to jump into the securities market. On average, they had between 350 and 400 years of accumulated experience doing exactly what they were doing. And then you add the third factor. Most of them had practically all their substantial wealth tied up in the business. They were risking their own money, hundreds of millions of dollars. And yet these highly intelligent individuals went bankrupt. To me, that's absolutely fascinating. If I ever write a book, it will be called Why Smart People Do Stupid Things. My partner says it should be autobiographical, but I think it could serve as an interesting illustration. These are perfectly decent people. I respect them, and they helped me when I had issues with Solomon. They are not bad people at all, but to gain what they didn't need, they risked what they had and actually needed. That is foolishness. It's simply foolishness. It doesn't matter what your IQ is. If you risk something important to you for something that isn't, it just doesn't make sense. I don't care if the odds are 100 to 1 or 1 to 100. If you give me a gun with 1,000,000 chambers and one bullet in just one of them, and you tell me to put it to my head, I'm not going to do it. How much do you want to be paid to pull the trigger? I'm not going to pull the trigger. You can name any amount you want, but that does nothing for me on the positive side, and the negative side is pretty clear. So I'm not interested in that kind of game, yet people engage in it financially without thinking much about the consequences. One thing I didn't realize when I was leaving school is how much the average person stands out to you. It's not because they have an IQ of 200 or anything like that. It's really about how they behave. It's the energy they bring, the commitment, the quality of how they do things, and how they treat the people around them. You will stand out much more than you might imagine. One of the things you should do, like it or not, is to get very comfortable with public speaking, for example. This is a skill that will last for 50 or 60 years, and it's a responsibility. If you don't enjoy doing it and feel uncomfortable, that discomfort can linger for a long time. But it's a necessary skill. Many of the skills you need to develop are human skills. If you can bring out the best in the people around you, that's a rare talent. It doesn't relate to IQ. It correlates with your attitude toward the world and other people. If you work on this early and are truly conscious about it, you won't need to outshine others. You don't need to be smarter than them. You just need to bring out the best in them, and that will pay big dividends.